All right, hey gang, Nate Bear here, lead technical tactician for Monument Traders Alliance and trade of the day. And in today's video, I want to go over the indexes. I've got a fresh trade setup that I am scouting for entry. And then I've got a couple of questions that you guys have written in, which I will go over sort of at the end of the video. All right, so let's just dive right in. Now, as we always do, I want to start by looking at the indexes and just a quick recap, right? So August, sort of a little bit of a bounce, pretty much down all month, a little bit of a bounce towards the end. Now we're into September and we're starting to get a little bit of back and forth, a little chop and slop. I expect that September we are going to see more of the same, essentially. I think we're going to probably head sideways, maybe down, maybe up a little, but basically sideways with a slightly upward bias. And I think we're going to ultimately come back up in the end of the month, possibly to test this previous swing high at around 4,600 on the SPX. Now, if we zoom out a little bit, I want to mark the all-time high because I do think that towards the end of the year, maybe after September, chop around, maybe up a little bit, something like this, into the end of the month, and then we break this high, and into the end of the year, right, October, November, December, we start working up and actually potentially break the all-time high in the SPX. I think that's entirely possible. A lot will depend on how NVIDIA does. A lot will depend on how Apple does. But these big, huge, mega, multi-trillion-dollar companies. But I think that scenario is entirely possible, if not plausible. That into the end of the year, we are at least looking at possible new highs, not only in the SPX, but also here in the QQQ. So same sort of situation. Down in August, a little bit of a bounce towards the end of the month, and then September so far has been a little bit choppy. But if we mark those same levels and we mark the high of the move here, the recent high of the move, and then we can go back, and I believe I have the all-time high. Yeah, I've got the all-time high marked here on the Qs. Do we get something like this throughout September? A little chop, and then towards the end of the year, we're not that far away, right? In the Qs, we're really, really not that far away. We're 28 points away or so. I mean, that's we can make that up in a week and a half on a big move. So very reasonable to think that it's possible that we could get all new all-time highs of the indexes this year, which would be pretty wild, right? All right, so the setup that I'm watching for entry is right here, MAR. And we've all heard of it. We all know what it is. Marriott International, it's a hotel chain. This is a very strong chart. If I look at the weekly chart, right, just go back and say, wow, look at this. I mean, there's no question in anyone's mind. This is a bullish chart. Very strong trend. Now, if we zoom into the daily, we can see here that we have a just perfect standard TPS pattern, right? We've got our bull flag. We've got our squeeze. And note that we have a momentum shift. I'm going to zoom in on that a bit so we can see. So we've got a momentum shift here where the momentum has been going down, 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 and it's shifting higher. So we've got that confirmed shift in momentum. And now all we need to do is see if we can get an entry at our desired level. And for me, you notice how when we've come into this $200 level here, we've found support here, we found support here. So my thought is, can we get another little dip down into this area and then go? So these little dashed lines that you see are my alerts. These are my alerts to say, hey, Nate, heads up. MAR is at the spot that you wanted to buy. So I would start by buying at 200. I would pick it up. I would pick up some more around 195, 196, 97 in through here. That's the 55 EMA on the daily chart. And then I would look to sort of position in through here and then see if we can get a move higher. As far as the options, I've traded stocks with better options. And what I mean by that is that they only have strikes $10 wide. Every 10 instead of every 2.5 or every 5. If you go to something like a Tesla, we can see that the option strikes, even though it's a higher price stock, are every $5. There's more options. I mean, literally, and within the options chain, there are more options available, which is always nice. But we can make do with what we have here at MAR. It's a great chart. So what I would do, come out into October 20th, 38 days out, and I will buy the $200 calls, and then I will sell the $210 calls against that, creating what's called a call debit spread. So I'll buy the 200, I'll sell the 210 against that, and you can see here that the limit on that price right now is $5.30. Well, that's with price at $4 higher. So if we can get a move down, I could probably pick this up for around $3. Between say $2.50 and $3 would be ideal to pay for that net debit, the net debit on the call debit spread when I'm buying the $200 call, selling the 210 against that for around $3 or so. Between $2.50 and $3.50 would be absolutely fantastic. All right. So that's what I'm looking at this week. I'll mark this chart up and include it when it goes out. And then I've got a couple of questions here. The first one said, hey, Nate, what do you think about McDonald's? Well, let's take a look. So McDonald's for me, in through here, was a really nice setup, right? We have a pattern. We had a squeeze, and it just failed. So at this point, McDonald's, it's got some work to do to the upside. I do think we're at a level that might act as support. However, the 8 EMA here is below the 21 EMA. And the 55 EMA is on top. So you've got stacked moving averages, but they're stacked negatively. So until that shifts, until that change, until McDonald's can start trading back above these averages up and through here, this is a bearish chart for me. Now, if I zoom out, I can say, well, it's a very strong trend. It is. But short term, until this picture changes with these averages, this for me is a bearish chart and not one that I want to buy calls or sell puts in. At this point, until this changes, I want to sell rallies until we start getting a shift at McDonald's. Instead of making lower lows, see these series of lower lows and lower highs. Until this shifts, right, and we start getting higher lows and higher highs, I'm bearish in McDonald's. Okay. Another question here from MK asks, I talked about a debit spread in MasterCard, but there was no indication where would be the best exit. So the thing about debit spreads is that they don't change the trade, the technical setup for the trade. So if we go back to the MAR example, right? If I get an opportunity to buy down here at 200 and then I buy calls, well, my target is still going to be a break of the all-time high. And then I push up to the 1272 extension. That's where I want to start looking to take targets, take profits, right? First at the all-time high. And then again at the 1272 extension, right? So I want to look to take profits first right here on this level. Get this marked up at 210. So if I get entry at around 200, my first target is going to be 210. My second target is going to be up here at about 214, which is the 1272 extension from this high to this low. That doesn't change if you have a call debit spread, okay? The targets remain the same. So it's just a different option strategy. Again, for example, in MAR, these options are a little bit pricey, right? So if I want to buy the $200 calls, I don't really want to pay $9.50. Let's pretend price was right where I wanted it right now, but I'm okay paying $5.30. And that's different for each of us. Some people may say, hey, I trade $20, $30 options. A $9 option is no big deal for me. That's fine. But the targets and the technical setup do not change between calls and a call debit spread. Now, if you said, okay, instead of that, I'm going to sell a put credit spread here, well, then you don't really need to target. It doesn't really matter where it goes. It just needs to stay above your sold strike, and you're going to make money. So, but with a call debit spread and a call, the target and the trade plan sort of remains the same. All right. And then one more here. Take a look at IBM and tell me what you think of the breakout. Let's do it. So in IBM, you can actually see I've got this marked up. IBM is actually a trade that we took this week in Daily Profits Live based on not the daily chart. The daily chart's great, right? It looks very, very strong. What we had here is a bull flag. All right, squeeze, and now a breakout. And what we're getting now is, if we look at this area of the chart right in through here, let's zoom in and check this out. So now all of a sudden we've got this beautiful TPS setup within that daily consolidation right in through here. So here's your squeeze. We've got our momentum shift, right? We've got our pattern. We're up at all-time highs, right? There is no resistance up here. Well, not all-time highs, but 52-week highs, where it's a very strong, very, very strong chart. So that's what I think of IBM. I love it. And if you can get entry again near, 148 or so, that's where it is pre-market. The trade is still valid. I think this can make a move over 149 and possibly over 150. All right, so that's what I've got for this week. I hope it helps. I appreciate everybody sending in questions. Please continue to do so, and I'll continue to take a look and answer them in next week's video. All right, thanks very much, everyone, and I'll talk to you soon. Later.